सौरभ, तुझे याद है लास्ट वीडियो में we were talking about हिसाब किताब?
Yeah, you were supposed to give me some tips, I remember.
Well, my main tip is to approach these financial statements as managerial tools. Even a manager at the highest level or a future business owner like you should have a basic understanding of financial statements. और इनमें भी सबसे ज़रूरी है balance sheets.
तो शॉर्ट में बता ना.
Bro, some things are better learned with time and experience. So for now, let's get the basics right.
Oh.
The capital employed is made out of two important items. Fixed assets, essentially property, plant and equipment, usually, and operating working capital. So what's the right financial statement to compute the capital employed? Well, the closest statement is the balance sheet. Assets are pretty close to the capital employed, but we're not there yet. Actually, on the asset side of a balance sheet, some operating and financing items are a bit mixed up. And it's the same thing on the liabilities and equity side. So let's have a look together. Property, plant and equipment. Is that an operating item or a financing item? I think we all agree it's an operating item. Inventories, accounts receivable. Are they operating or financing items? Operating, definitely. Then we have cash. Is cash an operating or a financing item? Here we're a bit in a grey zone. Some of us will say, yes, cash is an operating item because we do need to keep a bit of a cash buffer to secure our operations. Others will say, no, cash is a financing item. It's in the hand of the financing people and it depends very much on how much debt they have borrowed from banks. So that's why I was saying we are in a grey zone. Cash is partly operating and partly financing. For the sake of simplification, usually we consider that cash is a financing item more than an operating item. So let's consider cash a financing item. How about the other side of the balance sheet? Owner's equity. Oh, that's clearly a financing item. We said the company's fund holders, the financing parties, are the shareholders and the bankers. So owner's equity, long-term debt, short-term debt are all financing items. And how about accounts payable? Well, accounts payable, this is the money that we owe to our suppliers. So it depends on the negotiations run by the procurement people. Procurement is completely part of operations. So accounts payable are definitely an operating item. And you see, that's exactly what we were fearing from. Our balance sheet is a bit mixing up on both sides, operating and financing item. So let's do some cleanup together. I suggest the following. First, let's subtract cash on both sides of the balance sheet. In that way, the cash will disappear from the left-hand side. Good news, we get rid of a financing item that was isolated amongst several operating items. And on the right-hand side, what do we see appearing? Well, we see long-term debt plus short-term debt minus cash. This is all managed by people who look at how much money shall we borrow from banks or reimburse to banks. And that's what we call the net debt. It's the entire debt net of the cash the company holds. What's next? Now I would like to subtract accounts payable on both sides of my balance sheet again, so that they disappear from the right-hand side and we're now left with financing items only. And on the left-hand side, we'll see appearing inventory plus accounts receivable minus accounts payable. That's our operating working capital. And there we are. On the left-hand side, we are left with only operating items, namely property, plant and equipment, plus the working capital. That's what we previously called the capital employed. And on the right-hand side, we're left with owner's equity and net debt. This is the so-called invested capital. And we are reaching now what we call the economical balance sheet. We've transformed a bit the accounting tool into more of a managerial tool, a tool that separates better the operations from the financing activities. And that's very important because that's how things happen on a day-to-day basis in the company. Operations are managed on one hand and financing activities on another hand. See, my economical balance sheet is still balanced, and that's important.
So you see how financial statements can help you. As a rule of thumb, keep your finances and operations separate.
You know what's even better? Subscribing to upGrad.
And we are not done yet. So stay tuned for more videos and stay ahead of managing your financial statements.